Looking at the commodity space, it's a difficult one for precious metals because, look, quite frankly, markets, when they're selling off, generally benefit the US dollar. That comes to the detriment of the likes of gold, the likes of silver. And we have been seeing that of late. But then we're seeing that flipped because we're seeing equity markets selling off and the US dollar not necessarily doing too well because of the calls for what it could mean in terms of the Federal Reserves, because of the fact that this is a crisis centered around the US. And so actually we've seen precious metals doing relatively well at the back end of last week. Gold in particular, we can see rallied into 1890. That has been around about the high of the day today. And certainly if we look at recent price action, we would need to break the 1890 to point towards this pullback being over. We dropped down into your 61.8. We've now rallied up through your resistance level of 1858. That completes a double bottom formation, as we see here, and points towards the potential for further upside. Greater confidence comes with a breakthrough 1890, and we have tagged that and moved tentatively through that level. So certainly, if we continue to push higher and we push through that level, then it does point towards a continuation of that bullish trend that's lasted much of Q4, moving into the beginning of the year for 2023. So 1890 is going to be the key level, but it all comes down to whether we see the US dollar fare well or essentially come under pressure once again. So keep an eye out for that 1890 level. If we see that level broken, then it could point towards us seeing a more protracted move towards the upside. Until that happens, we've tagged this level. We're seeing stochastics rolling over. So certainly momentum waning a little bit. We're losing a little bit of that traction considering this sharp rally. There is a chance that we do reverse into this area, much like I was saying with the likes of the FX markets that are playing to the same kind of story here. So certainly we'd need to break the 1890 and sustain price action above that to give us confidence that we're going to continue that move that we've been seeing towards the upside of late. And then finally, looking at Brent crude, we're seeing a sharp decline at the beginning of trade today. We have seen plenty of chop recently. Certainly the rally up into 86.73 gave us pretty much flatlining highs. Now we've dropped down into 80.30. So look, we're talking about a symmetrical triangle where we're seeing lower highs, higher lows. That's now, or it certainly appears to be, reaching its climax where this market's now moving into a range bound position. We're seeing flatlining lows, essentially flatlining highs, and therefore soon enough I think we're likely to see that break that gives us an idea of where we go from here. The weekly time frame would indicate it's a bearish break that's likely. The bearish trend that has been playing out over the course of much of the last year really does look like it's set for another leg lower. If you look at this pattern here, it looks like you're just going to see another move towards the downside to continue this same trend. But we haven't seen that break yet, and certainly greater confidence comes with a breakthrough 80.30. As things stand, we saw a bullish end to last week, that bullish engulfing. So that pointed towards a potential rebound towards the top end of this range. But certainly risk sentiment really taking a hit once again this morning, and that has led to this sharp decline. So 80.30 is the key level to look out for. If we break through that level, then it points towards a potential continuation of this recent decline and a potential for a protracted move lower for this market. But that's only if we do break the 80.30. Until that happens, you can see that we're in consolidation mode and we still remain within that until we see otherwise. We haven't seen it yet. That raises the possibility of a rebound from this 80.30 zone once again for Brent crude.